We didn't really see oil come off any on the Iran deal, but the estimate is perhaps anywhere between $5 and $10 a barrel if we do see a lot of oil come on. What does that wind up meaning here at home?
Well, you know, all markets are forward-looking, including oil markets. Now, we can't extract what's been going on with concerns over Greece and China, and specifically how Iran is affecting oil prices. But I imagine some of the decline we've seen in oil prices was in reaction to anticipation, or the anticipation of a deal from Iran, with Iran being announced.
So people saw this coming, in other words?
I think they saw it coming. It's been well televised. And so investors, as you know, love to bet, and they would have been betting on what it would mean for oil if there was more supply coming online from Iran. So oil prices have declined. What it means for consumers is it's always a good thing, right? Stable and low oil prices lead to stable and low gasoline prices. It means you don't pay as much when you go to gas up at the pump. That's always good news. At the very least, it makes consumers feel better.
What's the lag time for that?
Well, the lag time between oil prices and gasoline retail prices is about 2 weeks.
Oh,
so
okay.
Pretty soon you start seeing it immediately flows through into wholesale gasoline prices, and then in about 2 weeks we see it flow through into lower gasoline prices at the pump, retail prices, what you and I pay, what Joe would pay if he drives a car, but he's been living in Manhattan a long time.
So, all right, let's shift to the U.S. econ. We got two pieces of bad economic data this morning. I mentioned them earlier. We got that NFIB Small Business Optimism Survey, a surprise drop from last month. That wasn't good news. And then the other thing, and probably many more people pay attention to it, and it goes into people's GDP calculations, a really weak retail sales number. We had hoped to see this mid-year recovery from the early start of the year. Not only was this a big miss, last month was revised down. So what's going on with the U.S. economy?
Well, I think for the business surveys, and we have our own business conditions survey as well, which bobbled lately with the concerns over what's been going on in Greece and with volatility in markets from China. Just the uncertainty was higher in the economy, and you'll see that feed through into sentiment in the surveys. So I don't want to put too much in the NFIB survey showing some signs of weakness there. Let's get into July. Let's get into an area where the dust has settled. Now, on the retail sales number, we had a big jump in May. Retail sales data tend to mean revert. That means that if it was a big jump in one month, we tend to get a decline in the next month. I am heartened that the decline was as small as it was, given such a large increase in May. What ultimately economists want to see is a July report that we would consider a clean report, because we don't know how much May sales were boosted by an earlier than usual Memorial Day holiday.
So May and June is a wash, and all the tension, we should all be watching that July retail sales report for the definitive take.
It puts a lot of focus on the July report, but I tell you what, I am heartened by the fact that the payback was less than it could have been in June, in the June retail sales data. So we have real consumer spending tracking 2.9% growth in the second quarter compared to 2.1% growth in the first quarter. That is a higher rate of spending, and anything near 3% like that means that your entire economy is going to grow somewhere near 3%.
Something that stood out to me, though, in the retail sales number was that restaurant and bar spending was actually down, and I know that Joe and I talk about this a lot as sort of you're going to go there first to spend your extra money, right? If you're spending there, you're definitely going to buy something from Amazon. So what was your take on that specific read?
So I tell you what, out of the entire retail sales report, that is probably the most important line item. And so you notice that this is a category that raced along when gasoline prices started dropping last year, and throughout the entire winter months, never once did we stop drinking or eating out. When that happens, I say the kids are all right. You know, because that's the first thing we cut back on. It's the first thing we do when we feel good as we go out to eat. So I am concerned that we did have a tick down in the June retail sales data report for that line item, but that was the first bobble in a very long string of strong months for that category. So it does bear watching, because the first place households will pull back if they're feeling angst about their finances is that category spending. But you look at the labor market, you look at other things going on in the domestic U.S. economy, and there's nothing that I can point my fingers to and say, aha, households should be worried.